Good afternoon, everyone, and good morning for those joining us from different jurisdictions. Thank you all for being here for today's conference. I'm very grateful to God, and I thank God for the opportunity to be speaking today again. I also thank all the previous speakers yesterday and today. They have also helped me in what I'm going to share today because they've done a lot of justice to the topic. So I'm talking on the professional accountant and the public interest responsibility, an obligation beyond compromise. So I would like to just pause and ask us, what do we understand by compromise before we just go on? Anyone? Compromise. Anyone? Compromise. When you hear the word compromise, what comes to mind?
Compromise means when it's not up to par, when it's not up to standard. Anything below standard is a compromise.
Okay. Thank you for that. So we'll just go ahead and we'll move. So I will start by sharing our agenda, what we're going to learn today. Can you go to the next slide? In today's paper, I'm going to look at public interest, the obligation, the compromise, the way forward beyond compromise. So remember that the topic is the professional accountant and the public interest responsibility, an obligation beyond compromise. So as a way of introduction, I just want to make it clear that even though we say professional accountants, some people will think professional accountants are chartered accountants, or that's people that belong to different professional accounting organizations. But for this paper, professional accountant is anyone who is engaged or employed in an accounting occupation for gain or compensation as a means of livelihood and not as an amateur nor a pastime. So anyone that is engaged in doing the work of accounting and is paid for that, you are paid for that. That's where you gain your means of livelihood. So you're a professional accountant, and what we're discussing today should apply to you. So what is the public interest? We have heard that throughout this conference, public interest. Like our first keynote speaker yesterday, Adaze, she already explained that the public interest is about the society. When we are looking out for the collective well-being of the community, of the people and institutions the profession serves, the collective well-being. So who are these people that the profession serves? We're looking at who are the public. All users of financial and non-financial information in a financial ecosystem. So in a financial ecosystem can be locally or globally, because we are now living in a global village. So every user of financial and non-financial information. This includes investors, shareholders, business owners, customers, clients, suppliers, employees, government, employers, electorates, taxpayers, citizens. So it's actually everybody. So you see that our reports, what we do one way or the other, they are so interconnected and they impact a large group of people. So what is the interest? What is the public interest? So the public interest, according to IFAC, International Federation of Accountants, so they recognized they spelled out some of the public interest that the public is interested in. We're talking about what the public is interested in for in view of what we do as accountants. So the public is interested in sound decision, useful financial and non-financial reporting. Sound and decision useful financial and non-financial reporting. Next slide. They're interested in comparability of financial and non-financial reporting across jurisdictions. That's where standards are so important. That's where accounting is very standardized. We work with standards. So the public, they are interested in comparability of reporting because the world is a global village. Then sound corporate governance and performance management. As an accountant, the public has this interest that you as an accountant we are interested that you provide sound corporate governance and performance management. You contribute to that. Then another interest is orderly functioning of commerce. That's orderly functioning of the capital markets, because the informations we give, investors rely on it, and the investors are all playing, investors, shareholders, business owners, they're all playing in the financial market. That is proper functioning of the commercial of commerce. So investors, like I mentioned, business owners, shareholders, everybody are relying on that account. Then you have another interest, financial transparency and accountability. And this is very key for public sector, government, the citizens, the electorate. They are interested in this. How are you using our money? How, because, and it's taxes, our taxes, and they are reported from when you do audits of different public organizations. How are the money used? Financial transparency. And now, in addition to that, I added this sustainability of people, planet, and profit. That's a new interest of the public now. And that interest is also directed to professional accountants. In your work, that is now a new public interest area. Sustainability of people, planet, and profits. So let's move to the next slide. We're going to look at what is the public interest responsibility. So this just goes without saying what I've already said before. So according to the IESBA, a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. So we have a responsibility. It's already stated in our ethical standard, which is our code. Just like in our different organizations, we have our handbook, our staff book. We have to abide by it. So the code of ethics for professional accountants is our handbook. So we have that responsibility. And I just brought it out in 3 major points. A, the responsibility of a professional accountant. Consider the interest of the public when performing professional activities. Don't only consider your interest, like Dr. Timothy spoke. He said that you are in between your clients and the public interest, and then your own interest. So you have 3 interests that you're actually serving. But always consider the interest of the public. It is the overriding interest between you and your employer and the public. The public interest overrides. So always consider that in your work. So we've already talked about what those interests are. So as you remember those interests, whenever you're working, corporate governance, financial transparency, sound working of commerce, have it in your mind when you're working. Then B, honor the public interest, the public trust. So the public interest comes with trust, because the public is interested in the output of your work. They also have a trust. There's an exchange of trust. They already trust you. So honor that trust that has been placed to you. So how can you honor the trust? One of the ways to do that is by maintaining your professional competence and due care. You have to learn and relearn. That's why we have continuous mandatory education or continuous development and professional development. You have to always develop yourself. So that's how you honor the interest. And also do your work. That's the due care. When you're now working, do it diligently. Take care, not just tick off the boxes. Try to apply those standards. That's the due care. That's honoring the trust. Then C, act and be seen to act ethically. That's another responsibility. Act and be seen to act. Not just act, but make sure you are seen to act. So when you are seen to act, can someone tell me what he understands by being seen to act? Okay. Because of time, let me not make it that interactive. So being seen to act, just like Mrs. Victoria said yesterday about independence in appearance and independence in mind. You can be independent in mind. That might not suffice. You also have to be independent in appearance, to be seen to act. I don't support it. Don't just say, oh, I don't believe in this in your mind. Be seen, say something. Then, okay, So acting in the public interest is not just a responsibility, it's an obligation. So responsibility is things that you should do. Obligations are things that you have to do. So let's go to the obligation. So what is an obligation, just for clarity? An act or course of action to which a person is morally or legally bound. So the key point is morally and legally, and then bind. Something is binding you, something is holding you. So that's an obligation. And and what we are saying is that the public interest responsibility for a professional accountant is an obligation. It doesn't stop as a responsibility. Yes, the standards, the code of ethics says it's a responsibility. That's your responsibility. That is personal. Then it goes further to suggest that it's an obligation. So let's go further. We have moral obligation. Moral obligation, a duty to act in accordance with what is right in the public interest. It's just a duty that you have. That's what we call responsibility. Your moral obligations are actually responsibilities, because this is the right thing to do. And the code, the International Code of Ethics for Professional Accountants, which is set by the IASBA, has set out guidelines of what is right for the professional accountant to do. So that is our moral obligation. It's stated in the code. Then we go to another form of obligation. Next slide, please. Constructive obligation. So this is another form of obligation. Constructive obligation arises from the professional accounting organization's action, or the action of the profession, the accounting profession, through which it has indicated to others that its members will accept certain responsibilities, and as a result has created an expectation that they will discharge those responsibilities. So this is the constructive obligation. You know, they'll say, "Oh, the code of ethics is not legally binding. It's not like it's legally binding," but that's not totally correct. It is enforceable. You can enforce it because it creates a constructive obligation. That code that we have creates a constructive obligation on the professional accountant and on the accounting profession, that you have to, people are already expecting, because you have put yourself out, I'm a professional accountant, and to even add it up, you're saying you are qualified. And ICANN, let me use for Nigeria, ICANN is established act of the federal government of Nigeria. So the act that established ICANN gives it a legal power. And ICANN subscribes to the IASB Code of Ethics. So you're already presenting yourself as an accountant. This is what we stand for, as is written in our code. So that's a constructive obligation. Then another form of obligation is legal obligation. Like I just said, most people say that ethics is not enforceable. They are just guidelines, things that you should do. We all know it's good, but if it's not in the law, it's not enforceable. So legal obligations are the professional accountant is legally answerable to the public interest responsibility. So that's where the legal obligation comes. You are answerable to them. So if there's a breach or a default in complying with the ethical standards, the fundamental principles in the discharge of your duties, you are legally answerable. And that's where the legal obligation comes. So that establishes the fact that our public interest responsibility is not only a responsibility, it's an obligation that is constructive, moral, that's ethics-based, and legal. So you remember in our IAS 37, if you remember IAS 37 standard, it's provisions, contingent assets and contingent liabilities. When you're defining what a liability is, what a provision is, a liability with uncertain amount and uncertain timing. So, and then a liability has to have an obligating event, has a constructive obligation and a legal obligation. Then that creates a liability. So this is just trying to tell us that we are liable. We are legally answerable for the public interest, to the public interest. So that's why we must not compromise. Because if you compromise, it's against the law. You are bound morally and ethically. So beyond compromise, like I just said, the essence of the profession makes it that it's beyond compromise. You cannot compromise that public interest responsibility. It's the essence of the accounting profession. And when you look at founding fathers of accounting, let's use Nigeria, West Africa as an example. You have Akintola Williams. You see that he's a champion of the public interest. And that is what has sustained the accounting profession in Nigeria this long, because he that was what he championed, and that is what accounting is all about. And so that's the essence. Even our standards show that this is the basics of accounting, public interest. That is why the profession even came into being, because there was a need for people to have trust in what this person is saying. Oh, this is how my company is doing this well, and you just go. At a point, there's a need for somebody to place assurance, for us to know what is actually happening. So that's the essence of the profession. So it cannot be compromised, the public responsibility. Then public interest is now active, and it's active and growing. Before, people don't really care that much. People don't really are not really interested. They have an interest, but it's not active. But now it's very active. We are interested in the public, in our interest being upheld. We're interested in youth having our interest. You see it by any little thing now. You're hearing about professional accounting scandals all over, because the public there's now growing active interest. So the interest is still alive. Then public demand is heightening. There's a demand for more ethical compliance, for more ethical compliance among professional accountants and the accounting profession. So especially with the coming up of ESG, is now a demand. The public are demanding that you must be responsible. You must respond to our interests. So we cannot compromise that obligation. We must uphold that obligation. So let's go to the compromise. So given all these things we have said, which is very clear, I'm just reminding us of what we know. Given everything we have just said, if it's an obligation, if the public interest responsibility is an obligation, then why the recurring compromise? We are hearing of a lot of scandals. For example, the next slide, we have some few scandals, accounting scandals involving audit firms as well as organizations. So when we're talking about these accounting scandals or public interest responsibility, it's also for professional accountants in business, people that are working as accountants in their office. It's not only for auditors. So we have the London Capital and Finance scandal in 2019. We have the Carillion audit scandal in 2018. And we know all the impacts how they impacted the public interest. You have the PwC Australia tax scandal. You have the Tingo scandal 2024 that happened, the Nigerian-owned company that was also listed in the U.S. stock exchange. So that was also a big scandal. It was a big scandal. So we're going to just look at the London Capital and Finance scandal. So what happened in that scandal? The London Capital and Finance company promised high interest rates on mini bonds between 2013 and 2018. So they actually misled the public that they were selling unregulated mini bonds, and people bought into it. In 2019, they collapsed. And it's not just that. They were being audited by Big Four companies. At the point, they were audited by EY. So what was the impact on the public interest? Cost around 11,100 investors. So you see the number of investors already invested on the mini bonds they were marketing, 11,600, and this is in the UK. It cost them more than 237 million pounds. So they lost their money. And that's the public interest. That's how it impacted the public. They lost their money. And when they lose their money, it will affect people around them. It will affect the government. So it will affect everybody. And actually, the government was also affected in this matter, because there will be compensation that has to be paid. Then consequences. PwC was fined for failure to report suspicion of fraud. They actually suspected that something is wrong, but they failed to report it to the regulators. Then the administrators are seeking more than 177.5 million pounds in damages. So that is the company, LCF itself, is going to suffer that. But I don't know whether this amount, the court has granted these damages. So this shows the consequences. And that is why we cannot compromise this, because the consequences are real and they are significant. 11,600 investors suffered loss, 237 million pounds. So that shows you the far-reaching and the huge impact of when we compromise on our public interest responsibility. So next slide. So why does this thing happen? What are the factors that cause accountants to compromise? Because in this case, that LCF, they surely have an accountant, they have a CFO. So all of them, they were misleading auditors. So those accountants, they didn't act in the public interest because people are giving you money. But it was actually, the law actually declared that mini bond as a Ponzi scheme. So you know what a Ponzi scheme is. So that's actually a big fraud. So you deceived, and the accountants there, they deceived people, and some accountants were part of that. So that's the public interest we are talking about. When you're in your organization, what they are doing, is it in the public interest? If it's not, you have to act ethically, speak out against it. If you cannot, you have to find a way of just removing yourself. So, and also the auditors have their role. So what are the factors? So according to the International Ethics Standard Board for Accountants, which is still ongoing, on firm culture and governance report, there's significant deficiencies in the culture of firms. So that is one of the things. The culture is the way we do things. So when the way people do things in a firm or in an organization is not ethical, so it's going to bring about compromise. The another one is nature of governance. They also identified that leadership at the top has a role to play. What is the governance in place? If the people at the top are unethical, then most likely the people under might not have any choice. Either you leave or you comply, or you are victimized or something like that. And what will happen will happen. So nature of governance is another factor that contributes to the compromise. Self-interest is also to me is a major issue, because that covers both the people under and the people on the top, both the accountant in business and the accountant, that's the audit firm. Your self-interest. Okay, if I report this, I'll lose my job. You know it's wrong. That's self-interest. Then the auditor, like for the LCF, they actually knew that something was wrong. But the thing is that they did not understand the business very well. It wasn't very, very clear. But we have gotten this job, we have to do it. They just did the job, but they know that something is wrong. Their issue was that they did not report to regulator. That's one of their major issues. So there was a self-interest there. You might say that self-interest was not too whatever, but it crystallized. It's crystallized. Oh, we know that there's something wrong. What you're supposed to do is either you report or you resign from the audit. So there was a self-interest. Let's just do this. Maybe they would have even said we'll not do next year, but you have done that one. So that self-interest is a key factor. Then knowledge gap. This was also identified by the IESBA reports, and in the sense of the need for training and education in ethics. There's this need for personally and firm-wide teach, educate, and train on ethics. So there are many factors, but we just look at this four. Then what is the way forward? So one of the recommendations in their report is ethical leadership. There's need for ethical leadership. You are exemplifying, you are in top management, and you're exemplifying ethical leadership. Not just set the standard, oh, this is the ethical standard, our ethical values and all that, ethical principles in this company. You people have to do it, but you're not doing it. So they're saying their recommendation is ethical leadership. the tone has to be set from the top. Then firm-wide ethical culture. There must be ethical culture in place. The way we do things have to become ethical, not just be left like that. The culture in this place is just left to evolve. However we see it, we do it. So, and another way forward is incentive and rewards. The recommendation is that ethical behavior has to be incentivized. There has to be reward attached to it. And that will be part of the ethical culture. You have to reward ethical behavior. Then whole of firm accountability. So accountability, we are accountants, but as it were, it seems as if we hold other people accountable. And then we forget to hold ourselves accountable in the way we do our work. So whole of firm accountability, that means from the top to the bottom, everybody must be held accountable to act and behave ethically, to strengthen the firm and the ethical culture of the organization. So these are some of the recommendations of the IESBA in this firm culture and governance project. So other things that we should also do, role and mindset, is also a publication of the IESBA. They did something on role and mindset in 2020. And the role and mindset simply means that the professional accountant, going away from talking about what you have to do in your organization and firm, now you're personally, have role and mindset in mind. What is my role? One of the roles that you have to promote ethical culture as a person. Promote ethical culture, whether your culture is not yet ethical, whether there is no framework yet. Promote ethical culture. That is your role and mindset. Then another role is that you have to recognize and be aware that you have to comply with the fundamental principles of integrity, professional behavior, confidentiality, objectivity, all professional competence and due care. So understand that is my role. That is role. Then when you talk about mindset, you have to, they say everything begins from the mind. So what is in your mind? Make sure you have an inquiring mind when you're doing your work. Anything that comes in front of you, be mindful. Inquire. Okay, you're inquiring. Okay, is this what's supposed to be done? Using the fundamental principles as a guideline, and what you're supposed to do, the standards you're supposed to apply. So have an inquiring mindset. Whatever is brought before you, try to think again. Then strengthen that. You have to have strength of character. That's also about mindset. It starts with the mind. If you are strong in your mind, then it's most very likely that it's going to translate in your action. So have the strength of mind, the strength of character to stand against unethical behavior. Just have the strength of mind. And another mindset point is bias. Be aware of your own personal biases. Because sometimes if you're not aware of your bias, it hampers your professional judgment. You might see something is wrong, but because you are biased, you are not even seeing your blind spots. So be aware of your biases. We have some biases like, okay, I've done this audit like many times, this audit clients. Somehow you're already biased. And that will make you just to let down your guards. Or maybe you're in a desk, I always do this, I just approve payment vouchers, we just approve. If you don't have that, if you don't, and you're not aware of your bias, that somehow you're already biased towards this particular payment voucher that comes from this person, you just approve. You will not know when you will now do something that's unethical. So we have to always remember role and mindset. What is my role? Imply to the principles. What is my mindset? I have to inquire. I have to be aware of my biases. So let's just have that role and mindset. That's really personal. Then we now have prioritize the public interest. Individual, on your personal level, let's prioritize our public interest. So this role and mindset for me, and when I was doing this, it was so key, and it's something that I will try to that will be ringing in my mind. Role and mindset. What's my role here? What's in my mind? What am I thinking? And what should I be thinking? What do I think those people are thinking? So role and mindset, prioritize the public interest. So, and as the last word, next slide, I think I'll be ending with this. As the last word, I'll also leave us with this word, that from the Bible that Jesus said, whoever wants to save his life shall lose it, and whoever loses his life will find it. So how does it come in what we are saying? So it just came to my mind when I was writing this as well. See, when you're always prioritizing your self-interest, you're always interested in, I'm trying to save myself. I'm trying to save myself. And that's right, just rings true with what Jesus said. Whoever wants to save himself, you're always trying to save yourself, disregarding all the other things you're supposed to do. You will lose yourself, just like what happened in Carrie Leon, what happened in the LCF. They were just looking out for themselves. I want to save, I have to have all the money. I want to do my own thing. So they lost many things. So you can also have that as a catchword that draws you back. Whoever saves his life will lose it. But if you lose your life, as it were, I will lose my job, and you lose your job, but you'll find it. You'll find another job. Thank you very much.